So welcome in Deven Choksey is joining us to talk more about fundamentals of the market. Deven, afternoon, in fact morning. Deven, I want to talk to you about one stock which is in focus this morning, and that is Adani Ports. They have done almost a $200 million acquisition of the Gopalpur port, which is on the east side in Orissa. And if you remember right, the management had recently shared with us right here on India Now, Karan Adani told us that the focus from here on would be to make a pearl necklace based kind of acquisition strategy. They want to be present on both the coasts and even on the higher side towards Middle East. Do you think this is a good one, not very expensive, and a good asset also they've actually taken from Shapoorji Group?
Yes, Ajay. Good morning. Well, I think if you see the east and west connectivity of the port in India per se, I think one of the key things that they are basically delivering uh, is largely the logistic management for most of the corporates. Because I think you have the flexibility to carry your inland shipping as well as I think your inbound shipping into a manner in which I think you can actually flexibly shift it to different ports. That is the first important point. Second point is I think the logistic part of the management becomes I think much smoother when you have so much of integration and the connectivity available because the same plant can possibly have multiple number of regions to come to different ports. And that's where probably I think they would get the price rationalization, cost rationalization, whatever you want to call it as. So from a business perspective, I guess I think it's a perfect move that they have been taking. They already have the presence now in the Middle East, as you rightly said, and also have Sri Lanka. So I think in the different parts of the countries and the world, probably I think you are having a strategic presence, which is making more sense from the perspective of bringing down the cost. At the same time, I think giving the maximum number of hooks to the corporates, I think who would like to stay with this company. More than 500 million metric tons of cargo handling capacity already in place. And with the kind of, I think, acquisition that they are making, they are having a blended cargo management system in which I think some of the high value addition and some of the, I think, lower value cargoes, the blended yield per se, I think, could be significantly on a higher side. In my viewpoint, I think that things are looking far better port. And then I think the visibility of next 25, 40 years, as far as I think the revenue generation is concerned. So that is where some of the long-term infrastructure players, investors, including sovereign funds, would look at this company more favorably from investment perspective.
Right. Kunal wanted to understand what your reading is on the charts for Adani Ports, although both enterprises and ports are in good shape, but what levels are you monitoring next?
Yeah, I think they've done reasonably well. So I think I was looking at the last 1 year of chart, and the stock has done quite well from a point where the stock was almost at 600, 700 rupees towards a point when the stock has made a fresh high for itself. I think it's been an excellent chart recovery for Adani Ports and many of the other Adani group of stocks, even on the short term basis. So I think except for that last 1 week, 2 weeks where most of the large caps, mid caps have gone through one phase of a correction, even the stock has gone through that similar phase of correction for itself. But it's not dented the near term trends for the stock price. So wouldn't be surprised that the stock comes back to hit the previous highs of 1350 approximately, and then crosses about those levels also.
Right. The other stock which I wanted to discuss was Skipper. Pull up the chart of Skipper, not only the last week, but last 1 month as well. Nuresh, Skipper shot up last week. Today, there is a note by Incred with a target of almost 400, saying that it could be a good TND play. Look at the last 3 months, 6 months as well. At 295 odd, how's the trade position setup looking, Nuresh, for Skipper?
So an interesting chart. The stock earlier broke out and was in a strong uptrend. Finally, in the month of Jan and Feb, it saw a quick move from 230, 250 levels to 400, and then corrected also back to 240. So decent enough correction, and now is making a comeback. Good volumes in the last two sessions. So a retest of that support and the breakout point is done. So out here it becomes a buy at 270 to 290 zone with a stop loss below 260. And eventually the stock, given the previous trend and continuation of this move, can again go back to 400 levels. So the trend is positive and the whole sector has done anything related to capital goods has done well. So out here a good 30-40% correction done from the top and now making a comeback. So looks a good buy on dips.
Right, okay, that's the view coming in on Skipper. But the big buzzers from last week, of course, autos held out very nicely. And on Friday's session, you did see a big perk up come in from especially the two-wheeler space. So Hero MotoCorp definitely was one name which perked up quite nicely. There was Bajaj Auto as well, which looked good. But two names, Kunal, which were topping the charts, both Idea as well as Indus Tower. Idea with a 4% move and Indus Tower with a 9% traction. Do you see that momentum continue on both these names?
Well, for Industar, yes, I would believe. So, in fact, even if you do a price comparison, the previous breakout trends for both of these stocks, Industar is moving, significantly ahead as compared to, Idea. So Industar, I think, has managed to break past above the previous highs. It's confirming a double bottom formation on the charts, and that too on the back of some extremely strong volumes and a complete change of trend for the stock. So, both of these stocks were erstwhile very, very high beta. You used to see trends of 5%, 10% on the upside, and then immediately these stocks had the capacity to try and reverse the trends completely and then consolidate and then move up higher. So, the trends were a lot more fickle for these stocks, but that's changed completely for Industar. That's a stock which has confirmed a breakout. Volumes have moved up higher, but for Idea, the stock still seems to be struggling at the 17.5, which is a major resistance for the stock price. So, I think Industar is a much more better chart, and the stock has changed its price trend. So, I would probably go with that rather than go with Vodafone Idea.
Okay, let's also get in some trading ideas from Sanjeev Hasin. Sanjeev was speaking to us on last week on these topics.
We are very, very bullish on the PSU pack, particularly the power lenders. We've had a buy on REC PFC from, I think, when they've turned 3-4 times from here. REC PFC continue to be in a very sweet spot. 1 lakh crore now being spent on solar panels, in solar energy, in wind energy, you name the business, REC PFC are gaining traction. There is the best recovery from state electricity boards. So those are two of the top names. IOC will stand out. Crude has started to correct. IOC distillates and margins and refining margins will be at the highest ever in the history. Ashok Leland is another name which we are very positive. RBL Bank, where Mahindras have taken a stake, it is not a 4% just as a passive investor. They are the largest shareholders. RBL Bank's NIMs and net interest margins are going to be very, very strong. And lastly, I think Ramco. Ramco Cement is a stock which everyone must own in their portfolio. 2.3 times price to book, trading at at the lowest enterprise value to EBITDA, and prices in South are now headed on the northwards. I think at closer to 800, this stock is a very must have in your portfolio. So this is a summary of some of the mid caps, and if you can add one Federal Bank, I think Federal Bank from here can be an outperformer. It can even hit new highs, given that the liability franchise is doing extremely well and they've garnered more share in the gold loan.
Deven, I want to talk to you about pharma names. One Mankind Pharma block is happening this morning, and the other, Torrent gave out commentary over the weekend to select brokerages that they are open for M&A, inorganic opportunities as well. These two names, which one would you prefer?
Well, I think to me, the Torrent looks I think more convincing from the point of view that they have been stabilizing their operations every stage and then growing further. That's what I like the most about I think this management style. Uh, Up till now, I think whatever the organic growth also that they have done, they have in each and every areas of therapeutical segments. I think they have stabilized their operations, created a scale, and then probably moved to the next level. I believe I think that is a strategy which is prompting them to now look at some of the inorganic growth opportunity. I'm not completely surprised to see I think this particular move because I think the specialty generics is now I think gaining larger amount of traction. Sun Pharma led the path and probably rest of the people have followed overall. I believe the Reddy's and the Cipla also have I think similarly moved in that particular direction. So some of the mid-tier companies like Torrent also looks I think at this particular strategy to go ahead with. And I believe that I think some of the acquisitions could possibly give them not only the product presence, but also at the same time, I think give the geographic presence, which is fundamentally very, very important for most of the pharma companies. So yes, I think the market capitalization and the currency for them is working to their advantage at this point of time. So why not? I guess I think this organic growth strategy, inorganic growth strategy should work well for the company.
I'm going to compare Tata Consumer and Tata Consumer, let's say, with an HUL. Why am I comparing that? All two FMCG companies. And look at the divergence in last couple of years. 2 years, 3 years. Actually, let's look at HUL, Tata Consumer from COVID and HUL from COVID and Nestle from COVID. These stocks did very well. We all were staying at home. We all were consuming more snacks, more bhujia, more farsan, more FMCG products. And HUL in Britannia did very well. But post-COVID, we're looking at post-COVID? 52-week move. HUL has given you no returns and Tata Consumer at the same time has given you a 60% return. Is it Tata's or is it the fact that the company is reinventing themselves? I think it's both. 60% return is not a mean feat for any consumer company to give. And then post-COVID or since COVID, HUL has given you no returns. Hello, Ajay bhai.
Oh yeah, yes, I was just looking at something.
Biggest FMCG company of India.
No returns, yeah.
No returns. Just think about it. No returns. And Tata Consumer has given you in that same time. I mean, your money is actually more than doubled in the same duration. Deven bhai, HUL used to be the choice of everyone. If you're bullish on India, you should be bullish on HUL. But in this crazy bull market, in this vibrant bull market, if I bought India's biggest FMCG company, I mean, I have underperformed even fixed deposits.
Yeah, Nikunj, I think it's a very relevant observation. I think no doubt HUL got, I think the biggest advantage in form of distribution reach. And that's where probably this company has been operating steadily and systematically over last so many years. I think the other companies have been catching up, and particularly you mentioned Tata Consumer. I think that's where probably, along with the brand portfolio, the new products that they have added in each and every vertical of the categories, I would think that I think they have also been systematically able to expand the reach. Another thing which remains common between the two companies where they're taking advantage, I believe so, is the area in which I think they have been successful in putting up the demand generation. Maybe I think this is where probably the next level of changes are also going to be witnessed in the consumer product companies, FMCG companies. I believe that I think the faster your ability to predict the market requirement, better would be the ability to distribute those particular products because of the channel that you already have created. And at the same time, I think would create a significantly large amount of, I think, the vote in form of lower cost of production and higher distribution. I guess I think this is where probably the difference of the next level is going to come up. And maybe I guess I think the Tata consumer is now probably better prepared than it was before. And that's where I guess I think the market has rewarded this stock. Whether the same level of performance would continue, I'm not too sure. But I believe that I think the markup will be slightly higher in case of Tata consumer as a preference, I think from even institution point of view compared to HUL at this point of time.
Implied Nifty is indicating that we could be in for a soft start. Bear in mind that markets are showing signs of bottoming out. Trend is high, but momentum is missing. How interesting is that, right? Trend is high and momentum is missing. What does that mean?
Yeah, that still means that markets are not ready for any kind of a major volatility. Add to that fact, in the points which you mentioned, the India VIX is at 12.5, 12.3, 12.5. That itself tells you that we are going into an event like elections, and the market is going with a complete lack of volatility. That itself indicates that there is more confidence in the rally on the indices this time around. The best part about the market in the last 6 months, 6-8 months, which was what we've seen, is a classic rotation. So earlier it was mid caps, small caps, then it was large caps. Within large caps, it was only private sector banks. Now you have metals, commodities, which are doing pretty well for themselves. So that rotation is actually keeping the uptrend much more buoyant for the indices, and with the lack of volatility, I think it adds to the more juicy part that we could probably be at a point where the index may continue to move up higher, maybe in a drift kind of a fashion, but the sector rotation would probably keep the market a lot more active.
Actually, on that Wednesday, which you're talking about, the 21,700 level came. The VIX actually cracked 7% that day, and this upside on Friday is backed by another 2.5% fall. So perhaps there is clearance of froth happening, and the market has become too light. One stock I'd like to discuss with Nuresh. Nuresh, Minda over the weekend has announced a big tie-up with Star Charge for EV charging, and some brokerage notes are coming at for new targets of 820 odd. Minda has gone through a correction like every other auto ancillary, most auto ancillary stocks. How does it look on charts?
So, if you look at Uno Minda, it was one of the first ones off the block back in 2020 in terms of making new highs beyond the pre-COVID prices. The stock crossed those levels, went from 200 to 600, and post that from 2021 to 2024, it has been sideways in terms of relative performance. The stock did break out in November, went above 640 levels, went to 730, and we are back to 600, 650 levels. So technically, there's a strong base around 600. The momentum has not been great. The 3-year return is almost zero for the stock. Interesting price point because the stock had gone through massive moves, and post that it's consolidated for 3 years now. So at current levels looks interesting, but would be more convinced once the stock starts trading above 680 odd levels. So technically the structure is positive. Today, if the price action confirms, then the momentum could also go towards positive.
Then there is a BofA ML report this morning which talks about valuations are looking slightly stretched in the entire power utility space. Do you concur with that?
I think in the near term, yes. I think most of the companies have probably, I think, on EV to EBITDA basis, if you look at these companies, I think they are actually, I think, fairly priced. I would normally call that in this kind of a bull market, the companies are normally priced to perfection, and that's what I think we are experiencing. The point which remains, I think, very clear to me that long-term fundamentals of most of the three companies, they give a good amount of clarity. So ultimately, when you start doing the valuation on a DCF basis, I think you get convinced for the long-term purpose. But this market is momentum driven. So to a greater extent, the headroom in the near term is basically becoming less because of the scaled up valuation. I'm fully convinced about the fundamental prospects of most of utility companies, including the great stories behind Tata Power. I believe that I think this particular company should be bought when the market gives a little sharper correction. 15 to 20% fall from any peak level prices, I think would be a better opportunity to buy into the portfolio of this kind of companies for investment.
All right. Where are PSU banks headed? PNB, BOB, Can Bank, haven't discussed them. They're still up 30%. PNB 30% in last 3 months. BOB 11% in last 3 months. State Bank of India popped right above 700 rupees. 15-16% returns in last 3 months I think is not bad at all in this kind of a market where index has given you no returns. In fact, last week index had lost all its gains for 2024. So Can Bank 6-month change. Let's look at the 3-month change for Can Bank. Nuresh, is there still a trade in good old PSU banks?
Still looks interesting. A strong trend across the board. We've seen Canara Bank correct a bit. They've not corrected as much as one would have wanted given the rally, but they've corrected 10-15% from the top and now have slowly recovered. Out of these names, I would still like Punjab National Bank because that's the one which over the long run has done terribly bad and still is in a trend. So PNB at 115 to 125 still looks interesting. The stock can break out again into new all-time highs. And then finally, the State Bank of India, which still remains a top bet. The stock corrected well from 790 all the way to 720. So there has been a 10% correction. But the next leg of the move would be slow and steady, unlike the previous leg which we got, wherein we had sharp moves across the PSU banking space. But this dip and any further fade off over the next few sessions should be a buying opportunity.
Deven, we all are talking about almost on a daily basis the way India manufacturing is actually reviving and government as well as private sector capex is coming back, all of that. But one of the key ingredients for any capex, which is ball bearing stocks, there are 3 of them: Schaeffler, Timken, and SKF. Just 2 weeks back, Kotak came out with a note around them, but these 3 stocks have gotten stuck into a range, perhaps valuation issue. Would you play any of these bearing companies? 3 of them, any of them out of the 3?
So Ajay, not having looked at it specifically except SKF, yes, I think these companies remain fundamentally very strong position. I agree completely with the rationale that has been put across. And on the top of it, I think because of the relatively steady steel prices comparatively, is basically helping these companies. On one side, the market demand scenario remains absolutely upbeat and strong in each of the verticals that they have, industrial verticals as well as I think automobile verticals. I guess I think the market demand scenario remains absolutely very convincing. Along with that, the steady input cost, I think the steel cost is definitely helping these companies. However, I haven't seen immediately, I think, how exactly the valuations are placed at this point of time. And maybe, I think, what could be the price projection. Though we continue to hold small quantities in our portfolio for SKF, but I don't think that I think immediately we are putting any trust on buying this stock in the portfolio.
Well, the pre-open rates are just kicking in, not that they are really relevant to today's market because hardly any news came out. Even though it was a long weekend, hardly any news came out. Deven Choksey, what are your top ideas for FY24? I mean FY25?
So, Nikunj, I continue to like, I think, the underlying stories in the automobile ancillary. I think automobile ancillary gives a good amount of opportunity at this point of time. On one side, the OEMs are showing the distinctly high amount of performance, be it in the commercial vehicle segment, be it in passenger vehicle segment, even for the two-wheeler segment. Some of the ancillaries, like one which you mentioned a while back, Minda, they look relatively more promising from the investment point of view, largely because of the fact that in last 2 3 years the stock has properly price corrected, time corrected as well. And basically, I think this stock has got underlying strength in each of the verticals, I think, which they are having. Most more like about this company is that they try to increase the pitch value in every customer's portfolio. And that is where I believe that I think this company has got better opportunity to even earn slightly higher EBITDA margins compared to the other peers in the industry. So we like, I think, auto ancillary portfolio. We also like engineering and R&D space within the IT, particularly, I think, these specialized verticals, I think, which the LTTS and the science technologies of the world, which they operate with. We believe that I think these verticals have got a relative amount of demand continuing for them. At least next 2 3 years of the portfolio demand is continuing for them, and that is where we believe that I think they also hold the margin advantage which they are continuing to enjoy. So I think we like couple of these areas within the mid-tier segment of the market, along with the hospitality segment, and particularly I think where the leisure tourism is connected with. I think that is this is one area where we believe that I think some of the companies are reasonably looking quite assuring from the point of view of investment returns for the investors.
Fair point.